Hey, let's discuss on the market tomorrow, Nifty levels. So when we check on the monthly, it looks like this bullish candle. It doesn't hold, right? It doesn't hold this bullish candle. So the market is sell and rise, right? The market is sell and rise on the monthly candles. So when we go to lower time frame like weekly, it is very clear, right? It is very clear that the market is sell and rise still. So today also when the market is little higher, so there is a sell off. So when we in the week, so it took the low, and then after that it there was a climb back, right? So from this to the 23,800. So but if you check on the day basis, the market, see, the market is at 23,600 range only. Say this was one day, it's closed, right? It's touched, but it's closed here. But apart from this, if you see, this also near to this area, this also, this also, this also, 1 2 3 3 days the market is at 23,600, right? A little bit here and there. So the market is holding at 23,600 technically, but when we see on the hourly chart, there's more noise, right? Like, see this, like higher high, lower high, high, lower high, low, lower low. So this also here today ended here the market. So when we check on these levels further to go through, tomorrow the market has to hold 23,600 again, or else the market is subject to fall again, right? So because there is, it doesn't look like, when we see this market from 12th, it's rise, right, and then fall. So and then again rise and then fall, right? So we can go through like this, right? The market is going on channel basis, right? So expect the similar moves based on the trader psychology, right? We can expect the similar moves. So from 12 to, right, from this area, from 13th May to 20th May, that means almost 7 days. That means 5 days from the last week to this week. It is moving on the channels. Market is moving on the defined channel. So so whenever there is a rise, there is a sell off. Whenever there is a rise, there is a sell off. So rise, sold, rise, sold, rise, sold. So it is best to follow this setup: rise, sold, rise, sell. But there is an ascending order from 12th, right? So tomorrow also when the market is rise, it will go on sell off, or when the market is go down, it can go again rise. So we have to follow this pattern tomorrow also. But however, when we go to these levels, market holding 23,586 is a matter to look on these channels, to trade in this channel. If doesn't hold the market 23,586, expect a new low. Okay, we can expect a new low. So 23,586 if it doesn't hold. So if it holds, then we have to see these levels or little upside also to capture the market. So this also resembles these channels, right? So be careful. Tomorrow we can expect the same methodology. So we have to be very careful trading in these zones. Okay, and expected if there is no look back from this level, if it doesn't hold these levels and it is continuously breaking this, then we can look for lower lows, lower highs, like lower lows, lower high, lower lows, lower high, lower lows, lower high. So right up to these levels. So if this also doesn't hold, then we have to go for a speed breakdown. So if this level holds tomorrow, then we can look for a trade in this zone. with higher highs, higher lows, higher highs, higher lows. So right, because the market is also evident here. See, higher highs, higher lows, and then after that one higher and then one low. So low and then high, low and then high. So let me see tomorrow whether the market holds 23,600 or it doesn't hold, means it will go down. If it holds, then we have to trade in this zone. Thank you.